Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Greed Maximus. We're going to spend a little time talking about why I've titled this video that name. Maximus is Latin for the greatest. So we're talking about the greatest greed. And we've seen some signs of that in this first month of 2023. Today, we're going to focus on the Nasdaq 100, the Qs, the Russell 2000 ETF, IWM, and then we're going to switch gears a little bit and focus on the dollar and what is it doing in impact on oil and gold and silver. Now, a little bit of an update because I just talked about those 2 weeks ago. So we'll see what's going on with that. So right here is a side-by-side of the Dow Industrials, the S&P 500, and the Nasdaq 100. For the week, the Dow is down a whopping 52 points. Little doji type candle, really didn't go anywhere. The S&P 500 was up 66 for 2 weeks in a row. And then the Nasdaq 100, an even stronger 2 weeks in a row. It was up 407 points this last week. Very, very strong. So let's go back and drill down and take a look at the Nasdaq 100, the Qs, and the wave count that we've got. So I've got the weekly and the daily on the left. Now, I'm talking about, you look at this and you say, well, how can you look at this and say, this is greed maximus? It's like, it just doesn't seem like that is possible, but I saw some interesting tweets and some interesting charts that I want to share with you. The first one is this. Isabel Net came out with this little chart here that is talking about the spread between the U.S. BBB rated corporate bond yield and the 90-day Treasury bill yield. Notice where we're sitting. Down here in the same territory, even lower than where we were prior to the great financial crisis. And then you see some of the lows that occurred even a little bit lower than where we are now. Back in July 73, October 79. January 66 jumps out at me because that was the end of cycle wave 3 coming up off of, I think it was 1942, cycle wave 2 back, or Elliott wave count that I've got in terms of the long-term wave count. And so here we have a big major move in the market ending right here in this territory. And then, of course, back over here, May 29, right before the 1929 crash. So kind of interesting little chart that they shared with us. And then when you look at what happened in January, look at some of this activity. Trading orders from the retail army in stocks and exchange-traded funds accounted for 23% of the market's total volume in late January, above the previous high of 22% reached in the 2021 meme mania. Pretty crazy stuff. There was a lot of, you saw the meme stock pop. You saw a lot of, it was like all the cats and dogs from 2022 were getting bid up in January. And then when you look at the fear and greed index that John Husband put out, or he showed a comparison of the CNN's fear and greed index in terms of where we sit right now and where were some of the peaks and how did that compare with the SPX over the last year. Pretty interesting stuff where this lined up. And of course, we're sitting at a reading up over 75 on that index right now that we hadn't seen at any of these counter trend peaks. So yeah, I think there's a little bit of greed going on, and I would call it greed maximus, and that's where we're sitting. And I find it really interesting that we're sitting there at this peak, which is one of the lower peaks, at least as of right now. Now, I'm going to talk about that, yeah, I haven't changed on the Nasdaq 100. I haven't changed the fact that I think we're at a peak of minor 2 of intermediate wave 3. But my alternate count is that intermediate wave 1 didn't end until October. By the way, as an update, I have moved to this count saying intermediate wave 1 in October for the Dow Industrials and the S&P 500. And on the S&P 500, mainly because the same thing I'm watching right here on the Nasdaq and on the Russell. In the S&P, this wave 2 became larger than this wave. and that you just can't have a minor wave larger than the intermediate wave. Okay, so it just didn't fit. So that's why, and I'm watching this very, very closely. That's why I moved to intermediate wave 1 here at the low in October. So pretty interesting activity going on. Let's go over to the daily chart, and here's what I'm looking at. Okay, so 319.40. That's a number that at that point, that's where minor 2 will equal the length of intermediate wave 2. We punch above 319.40 and I will then be switching to the alternate count over here on the Qs. Now it's not very far above where the high was on Thursday. The high was 313.68. So we're really talking about less than 6 points above last week's high, and we'll reach it. Now from a retracement standpoint, now, okay, the retracement levels I've got in here is 2 versus 1 of this 2 versus this 1, okay? But if we move to this being, let me get my marker out. If we move to this being intermediate wave 1 and this being intermediate wave 2, these numbers will change, because you're taking a move divided by a much bigger move, okay? So I tell you what, this is where we're sitting with this wave count, okay? And I'm gonna get rid of that for the moment because I just don't want to create too much confusion. These dotted lines right in here, this is what I had as a resistance zone. And Thursday, we got right up into it. We actually closed above it, and then we came back down on Friday, closing back below it. So we'll see if we continue to push up in here. I just don't see 5 waves in this C wave as being really complete. It doesn't really look right to me just yet. So we're keeping an eye on that and keeping an eye on 319.40. All right, let's take a look at the Russell 2000. So I've got the same wave count on the IWM as I have on the Qs, okay, that we are in intermediate wave 3, that we're minor 1, 2, but boy, I tell you, minor 2 has really pushed very, very deep, and we've come very close to taking out the high of August. So it's even closer to invalidating this count, in my opinion, than the Qs. And that's why I'm looking at this number right here, 201.71. At that point, this wave 2 equals this wave 2. And if that happens, we push above that, which again, we're not very far away, the high 199.26, we're talking 2.5 points from last week's high. We push above that, and this will become intermediate wave 2, and this will become intermediate wave 1. Okay, I'll be moving this over to here, and this will be moving over to here, and I think that will tell the picture a little bit better. But I want the market to show me that that's truly what is happening in here, okay? Because right now, there is nothing really that is invalidated this wave count. Yeah, it's very, very deep, but a wave 2 is still valid as long as it doesn't go beyond the beginning of wave 1, okay? So that's where we sit. We've got a big zigzag pattern that's underway and looking for this to finish and roll over and break down. Okay, that's the Russell 2000. Let's take a look at the dollar index. Okay, the dollar index up 1.17 on Friday and up 99 cents for the week. But, looks like a strong bullish type candle underway for the week. Now, the thing, we've got 1 day above the 10-day moving average. The blue line is the 10-day moving average. Let me go over here and look at the daily a little bit more, okay? We've done that before. We had 3 days in a row and got a little fake out, and then it never went anywhere. It just broke down. So the only wave count I got on this is that we have got 5 waves down. And what I was looking for, and I'd been talking about it with the members, is that I had been looking for 100.91 for a potential end to wave 5. Why? Because that's where the 5th wave would equal wave 1. And that's one of the targets. There are several targets that you can set out there for a 5th wave. That's one of them. Well, this went down. The low on Thursday was 100.82. So got very, very close. And now we've turned and flipped and come to the upside. So we're watching to see what kind of follow through do we get to the upside. But here's the thing. This is a 5-wave move. Okay. So what are we going to get following this? We're going to get a counter trend move. I've got it labeled as B. Now, my default first pattern that I'd be looking for is a zigzag, but it doesn't have to be. It can be anything in terms of a corrective type pattern in here for a B wave. So we'll watch and see, and these can become kind of complex. I would say my first resistance level is going to be up here at where this high was reached, 105.82, and this high, 105.63. So right in that area is the first resistance zone that I'd be looking for. So that's my expectation on the dollar index. It looks like there's a decent chance that it's turned and ready to go. Okay, now, so what did that do to oil and precious metals? Let's take a look at oil. USL, which is United States 12-month oil, was down $1.03 on Friday, down $2.42 for the week. The wave count I've got is this. Okay, I've been looking for this to come down in a zigzaggy ending diagonal pattern because that's the way it started out in here. And now it seems to be coming down with a vengeance all of a sudden. It took a while. I've been looking for this to happen for weeks now. But now it seems to be playing out. We've got A, B, and I'm looking for this C wave, and I'm looking for this. 1, 2, 3. And so now the real question is, how is this going to play out in terms of a zigzag pattern for wave 3? That's what I'm looking for. But this came down pretty hard here on Friday. Closed just like a penny off the low. Okay, and then where did West Texas Intermediate close? It closed at $73.21, down $2.67. So we're not far from the 60s on 60 handle on West Texas Intermediate. All right, let's take a look at gold. Well, gold really got whacked the last 2 days of the week last week. Here's Thursday, here's Friday, and Friday was down $4.44 on GLD, $5.76 for the week. Now, I've been looking for this to break. I've been, working off the bearish count, staying with that. Now, I've been, having my eye on a possible, bullish scenario, and it's still out there. So we'll see if this continues to play along with the bearish view. But right now, it sure seems to be, and coming down very, very hard in terms of the way it did. Notice how I said SLV peaked right in here? Well, let's take a look at SLV. SLV was down 101 or $1 on Friday, 111 for the week. And boy, we had a lot of choppiness, a lot of noise that went on in here for basically the month of January. Then all of a sudden we got this breakdown. I'm not quite sure what to make of this. And as I told my members this morning, I said sometimes, or yesterday morning, sometimes you look at this and you're just like, okay, it's hard to make heads and tails of it at this time frame. And you move up to a higher time frame or to a lower time frame sometimes, and it becomes just a little bit clearer over here. Well, this is a pretty bearish looking engulfing candle to the downside. So we'll see how this plays out with silver, but it was down 4.7% on Friday alone. Pretty big move to the downside. Okay, that is it for this video. We'll see how the follow through happens next week. We had a lot of news, a lot of things hitting the market last week between the Fed and big earnings announcements, etc. So we'll see what happens as a continuation. I know we have more earnings releases coming out this coming week. Okay, if you felt like this video was helpful, give it a thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button there on YouTube. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great rest of the weekend and a great week. We'll talk to you on the next video.